Tiffany, you can see my screen share, right?
I can. All right, I posted in both of the private pages, so we'll see if we grab some more people coming in.
Okay. I'll just give it a minute for other people to join.
So how is everyone feeling this beautiful Friday afternoon?
I like the low humidity now, so this is much better weather for, we'll get it for a month.
Agreed.
All right, I'll get started. We can, as other people join, they can get caught up. So happy Friday to everybody. So just sharing you with my screen again. We're going to run through all the market stats for Charleston today, and I got a couple different things to talk about. But I always like to, start out with going over where the market is today. Basically, the first Friday of the month, we have all of last month's numbers. So September numbers, yeah, there's still some agents entering some closings, but for the most part, they're going to be here. So our market monitor, so right now where I'm at, and again, I'll try to start out every market stats meeting like this, I'm just on the all price ranges, residential. So this is all of MLS. So this is the entire MLS, all data points. So what I've done here is, so we're going to go through some of these tabs here and try to figure out where the market is headed and what's going on. So here's the sales price. So sales price, median sales price. So if we look at what's happened, so we're at 310. So, and again, this is always a good number to keep in mind if you're talking to people from out of town. It's like, well, what's the price point for Charleston? Well, the median price is 310,000. So remember, median means half the sales are going to be above the median price and half the sales will be below. So, just remember that from an aspect of it's a good data point to keep where you have an understanding of the price point of Charleston if you're dealing with clients that aren't from Charleston. So, but if you look at, so in August, we're at 315.5, September, we're at 310. So you can see it's not always just a straight line up, it kind of jumps all over the place, but you can see during kind of the shutdown where we were at. Because remember, June of 2020, were contracts written, for the most part, when we were fairly well in shutdown mode, kind of April, beginning of May timeframe. So you look at the jump that we had the last couple months, well, we've settled back down to 310. But one interesting thing to watch is last September, if we go back in time, we were at 285. Mm-hmm. So we went from 285 to 310. Well, last August we were at 285 and we went to 315. So I think what you're going to see is going in, we're hitting more that seasonality, curve that we usually have. We pushed a lot of these closings to summer and early fall, but I think we're going to fall a little bit more into the seasonal trend because this is slowing down. So last month it was up 10.5% from last August. So this September's up 8.8% from last September. So I think we're going to see and I'm not, the median price is shifting on a seasonal basis. I'm not in any way saying prices are going down, but from a median sales price standpoint, we're going to go into a more traditional seasonal curve. And I mean, this happens every year if we go back in time. But if we look at price per square foot, we're seeing the same trend. It's like, we're jumping up price per square foot, a little bit lower in September than August. So that reflects the same thing as the sales price. Again, nothing wrong with it. Traditionally, seasonally, we start to slow down this time of year. Here's our percent of original list price. So when we look at this, so what we're seeing is that, and again, I want to have everybody keep in mind is that this kind of started last fall. Look at October, November, December, we started going up pre any sort of knowledge of COVID. So this trend was already in place. You know, we had a drop here in June, but keep in mind that June drop those were contracts written during the shutdown. So we are at 98.9%. So negotiability on a median price is that means more than basically half are getting 99% or more and half are getting under 99%. Now, again, this is going to be very new construction specific, area specific, but you can see the trend overall compared to the last 5 years. We're at the highest level we've been at the last 180 days. We're breaking all types of records now. And again, this was starting pre-COVID. We were already at a higher trend on this. Days on market. So again, you can see the seasonal trends with the days on market going higher. So if you look at the peak days on market, let's go back in time. So 2016, February was a high, right? 36 days. 2017, what's the high? February. 2018, January, February. 2019, January, February. 2020, February. So what does that tell us? That is the seasonal trend for those contracts at the slowest movement days on the market is, it's that holiday time period. But look at what's happened over the last, 180 days. So now we're down, September was 11 days on market. So this is median. So keep in mind, so half the listings sold in faster than 11 days and half sold in slower than 11 days. So ask yourself on your existing listings is where are you at? Do you have a house that's been on the market for 50 days? Well, you're certainly in the lower part of the median, but have you changed the price recently? Because the market is telling you if you're in a average price point that you should be selling in around 11 days. So your scripts with sellers up front need to be, the MLS as a whole has 11 days on market as the median days on market. So if we haven't sold within a couple of weeks, the market is telling us we might need to change our price. Now, again, if you're dealing with a $2 or $3 million house, that might be a different conversation, but on a median basis, 11 days is the median. And if we go back, let's just do this for fun. If we go back in time, look at the 11 days for reference. Pre-recession, the fastest we ever were was March of 2005 was 16. Mm-hmm. So we are selling houses faster than we ever have in Charleston. So, again, the flip side, let's talk with your buyers. Your buyers need to understand a good house is the market. They need to react to it. They can't wait till tomorrow to go look at the house. If it's a house that we feel like is going to move quickly, it's like they have to go and react to it today. They can't wait for the weekend to make up their mind. So, we are as fast as we've ever sold houses in Charleston right now. I'm just going to go back to the 5 years here for a second. So let's look at months of supply. So again, months of supply, look at our drop off that we're still happening. So September was 1.8 months of inventory as the entire MLS. I mean, that is phenomenal that we're at 1.8 months of inventory. But I also want to stress, look at what was happening the second half of last year, right? So drifting down, coming out of summer, we started drifting down, right? And into the fall. And then here's the beginning of the year. We were still drifting down through February. And then what happened? Well, COVID happened, right? So we jumped back up for a couple months, but now where are we at now? We're back on that downward, even a greater slope trend. Now we're down to 1.8 months of inventory in September. So that basically means every other house is selling this month. So that's the trend of the market right now. And again, going back historical reference, let's go back as far as we can with this data. Pre-recession, our low was in 05, about 3 months. So we are below the pre-recession levels of months of supply, which is phenomenal if you have 1.8 months of inventory. And that's reflected, you'll see that's where that's reflected. Let's go back to 5 years again. So that's reflected in the homes for sale. So look at our homes for sale. So you see the seasonal trend, right? We come beginning of the year, spring, summer, there's more than ever for sale, and then it falls off. And the same trend here. So these are all the seasonal trends, right? And it looked like maybe 17 to 18 to 19, we were starting to drift up until we hit the second half of last year. And then we started drifting back down and then falling off the cliff after we got back in business here. I mean, look at this drop off. So if we go back to September of 2019, we had 6,286 homes for sale. So you as an agent, if you put a buyer in your car, you could go show them 6,286 active homes for sale. Well, look at today, we're at 3,270. So that's a 48% drop. So we've almost lost half our listings in a year. So you as an agent, look at your inventory, and if you can go back in time, how many listings did you have a year ago? You know, this September of last year, how many listings did you have compared to September of this year? And the market is saying, as a whole, you have half of the active listings you did a year ago. Are you above that? Are you below that? Where do you stand relative to that? But you can see our challenge is having enough houses for sale. And this is a significant drop off. I mean, think about it, we lost half the listings in a year. But I also want to stress this was happening pre-COVID, just COVID has sped this process up for us. So let's go back real quick. So pre-recession, 42, there's one that's 4,000. So we were the lowest point, we're almost getting to 4,000 listings. So we're below where we were 15 years ago with a lot more people living in Charleston. And you can see the drop off here visually over those years. Let's flip back to 5 years real quick. So that's homes actively for sale. Here's closed sales. So closed sales, obviously, to June, you know, we jumped over 2,000 closed sales in June. We did it again in July. We did it in August, and we did it again barely in September. So we've had 4 months in a row of over 2,000 closed sales. Now, again, if I go back in time, I just want to show this for reference. This is historical as far back as I can go. So we have back to 2004. So we never eclipsed 2,000 sales. Even pre-recession, we never made it. And then we were touching 2017, 18, 19, you know, we were touching, you know, getting very close. And now we've had 4 consecutive months of more sales than we ever historically have had. So let's flip back to 5 years. So new listings. So here's the problem, is that look at the new listings. Does it look anything different than, you know, relative for 15, 16, 17, 18, 19, 20? This looks like every other year, right? So this is the challenge, is our sales are way up, but our listings are very typical. The only thing atypical, I would say, is right in here. We only listed 1,812 in April because everything was shut down, but everything else looks like these other years. So there's our months of supply problem. It's not necessarily the demand is hitting us, but the supply of sellers is not. So we are not, you know, we're not filling, you know, we're not able to fill that listing pipeline as fast as we're selling them. Now, I also want to keep in mind, look at September. Let me go back to September. So September of 2019. So this is very interesting. We were at 1,677. Right. So let's look at September of 20. We're at 2,240. That's up 33%. So interestingly enough, why do you, and again, I'm just speculating and sharing opinions, but we're 33% higher number of listings that hit the market in September than last September. Is that a catch up, you know, in the pent up demand of maybe people who wanted to move that are finally getting their houses in the market? Is it maybe some sellers seeing these prices and like, you know what, I'm going to try to sell my house. You know, I see what my neighbor's selling for, but it's very interesting that September was significantly higher than last year. So we'll see what, you know, just, we need to watch that trend going forward. But so August was 2,240. And I think if I can scroll over, September was 2,240. So same numbers. July was 25,2062. So look at August was about 2,200. So August to August was about the same, but September to September was significantly higher. So this is something really to watch for going forward, is that why did so many people all of a sudden in September decide to list that weren't there in June, July, and August? You know, with school starting up, you know, the dynamics are a little different this year because obviously everything is different and school starts different, but this is something going forward to keep a close eye on, is that inventory coming on the market was significantly higher, which is the only number that is significantly different than the other trends. Pending sales, we're still way up there on pending sales. So September 2020, 87% higher. So let's go back. So September of 19, we had 1,201 under contract. September 20, we have 2,249. So almost double the number of houses under contract, at one moment in time, September to September. So it's really quite phenomenal, the jump we've had. But I mean, if you look at the last 4 months, 2249, 2341, 2392, 2324, last 5 months, and 2268, higher than, if we go back in history, higher than anything we've had in history for 5 months in a row. So again, relative reference point, we have had more buyer activity than we've had the last 5 months than in the relative, and I think if you could go back historically, than ever in Charleston. If I could go back pre-2004, I'm pretty sure it was lower than this trending. So again, phenomenal few months with that dollar volume. Go back to 5 years. So dollar volume. So look at the dollar volume. So we hit 800 million in June. We hit that $1 billion mark in July, 900 million in August, and we hit 876 in September. Now there's a few closings I'm sure still being entered into MLS because it's only October 2nd that closed in September. But for relative reference, we've hit over 800 million now 4 months in a row. Again, going back historically, I go back to the max. Did we ever hit 800 million? The highest we ever hit was 765. So the last 4 months, we've broken the all-time record for any month, and we've done it 4 consecutive months. So all of that, oops, let me go back to 5 years again. So again, what we need to watch for going forward is this new listing. Now, again, I think we all have buyers that aren't finding the right house. So we do need some more inventory. We need more of a balance. 1.8 months of inventory that the months of supply is showing us is not any sort of balance. We need to get more houses on the market. Is this a sign of it happening in September? I mean, we're going into the holiday season, October, November, December. So traditionally you'll see it drop, right? So, you'll see every year, it doesn't matter what it is, you're going to see that drop off on new listings, but then the ramp right back up into the spring. So we just need to keep a close eye on what's happening going forward, especially October. If that trend is the same and we're up on listings, then we need to ask ourselves, well, am I getting those listings, and why are those listings happening? Is it distress sales? Is it because sellers realize what they can get for their house? What are the reasons why that new inventory hitting the market is going back up? And I haven't, done this with, this group before, but what I wanted to do, I don't think I have, I wanted to go through and do, show you the vacant land. So I know all of us, have done with vacant land, on and off at some point, but I wanted to kind of go through examples of vacant land activity. Let me just move this. So on here, what you can do is instead of, sorry, I'm just trying to move this chat box. So on here, what you can do is you can come to the property class. So we always kind of look at the residential, but what I wanted to show everybody was, let's look at vacant land. So if we scroll and we click on vacant land, what it's going to do is it's going to pull from the vacant land inventory. So, and what I want to do is go the max back for this. So here's vacant land. So here's the median sales price of vacant land in Charleston. So the median sales price in September was 153. But look at the jump from, we were at 57,000 in April, obviously artificially low. But, before that, we were kind of hitting around 100. But all of a sudden, we've jumped up to 153,000 for 1 month. Now, again, it's just 1 month, and we need to look at more of a trend. So if we look at a rolling 12 months, but you can see this jump happening here coming out of this from May to June to July to August, September. It keeps going up when you do a rolling 12 months. So you can see this rise here. Now, it doesn't meet at all what the craziness of, the recession brought on, where we were at 158,000 on a 12-month rolling average in '06, coming from 80. And again, I want to put perspective on, for those of you who weren't in the business back here, I sold a lot in Hamlin Plantation, probably in 2001 for $70,000. That probably right in here sold for $300,000. And then probably right in here sold for $70,000. So, and the today, that lot would probably be worth about $275,000, $300,000. So you could see the wild swings that were happening back here on valuation on vacant land. And again, we're seeing this run up right here. So it's again, this is something else to watch moving forward, is what is vacant land doing? Vacant land is also affected by construction costs. As construction cost goes up, and it's harder to pay more for vacant lot, because the total package is really what matters in the end to that end user. Price per square foot doesn't really apply because it's vacant land. Percent of original list price. So we've been kind of stuck in this 90% range for a long time. Obviously, in here we were hitting 98%. At the low, we were hitting 80%. After the recession, coming out of that, we were about 80%. Now, for the past 5-6 years, we've been stuck around 90%. So negotiability on lots is obviously, the houses we were looking at was 99%. On lots, it's about 90%. So a lot more negotiability on vacant lots. You just have less quantity of buyers compared to the sellers out there. Days on market. Now, I find this interesting, is that this is maybe against what you're looking at the houses, is look, the trend for vacant land days on the market is actually opposite of the trend for residential houses. So we've gone up coming into this on days on market for vacant land. So we are taking longer to sell lots than we did at the end of last year. Now, I think a lot of that has to do with construction costs, like due diligence periods, trying to, it's selling vacant land, whether you're representing a buyer or seller, can be tricky, because there's a lot of moving parts of construction that a lot of first-time land buyers don't quite understand the complicated process to it. But it's interesting that the vacant land days on the market is going up, whereas the residential is going down. So, for those of you who have lot listings, or if you're interviewing sellers, they just need to understand it takes more patience selling lots. It takes a longer period of time to get them sold. Months of supply, again, we're still kind of whittling through some inventory. I mean, it's phenomenal when you look at even the best period of time. So if we go back here, the low I can find is 8. So around 8 at the end of 05, 06. So think about that for a second. Vacant land at the peak pre-recession was by all means still a buyer's market, right? Because 6 months is usually the dividing line. So even pre-recession, vacant land was still a buyer's market. Look at what happened in the recession. We had 122 months of inventory of vacant land. Now, I want to put that in perspective for everybody. That means out of 122 sellers, one would sell that month. So if you were working vacant land, you would have to carry 122 average lot listings, and you would sell one a month. So imagine that you're calling 121 sellers and saying, sorry, your lot didn't sell this month, better luck next month. So I just want to put in perspective back here and where we're at today. So it's taken a decade, right, to work down to, we're at 22 months of inventory. So even vacant land today is still what people could call a buyer's market. And again, keep that prices out of that in your mind. It's just the absorption is not there compared to the residential houses. We're still at 22 months of inventory and have been for a couple years. Vacant lot for sale. They say homes for sale, but this is really vacant land for sale. You can see we're dropping off on vacant land. And I wanted to zoom in on this one. So if we only go back 5 years, let's go back to 5 years, and let's do this monthly. So look at this drop in vacant lands for sale. Now, January, February, we're fairly similar, I would say, to last January, February, and the February before. So I'm not going to say this was a downward trend pre-COVID, but look at what happened coming out of COVID. As things started to open back up, look at this inventory start to drop. So now we're under 2,000 listings. We're 22% lower than we were a year ago. So this is an interesting trend showing the demand picking up, because it's absorbing what the vacant lots for sale are. So you have the homes for sale here dropping off, and part of it is demand. Part of it, in some places, I think we're just running out of vacant lots. Developments have been done. So part of that is happening, but look at this drop in vacant lots for sale. And then if we look at closed sales, so here's a jump. April was obviously a low point, but look at once we hit June, July, August, September, all of those are hitting relatively high periods. And again, not as high as we were pre-recession, but higher than we've been over the past, good part of a decade. So we were 84% higher on vacant lot sales this September to last September. So the combination of the closed sales and the lowered vacant land is positive for those people trying to move lots. Here's new listings. So again, I would say it doesn't look anything different for the most part compared to the last good part of a decade as far as number of new listings at the market. And I mean, even coming into COVID, it doesn't look anything significantly different. Pending sales, look at the jump of pending sales. So in April, we were at 86. We jumped up to 167 in March, 186, 194, 192. So we're up 83% year over year on vacant lots, pending sales. And this is, again, the whole Charleston market. Now, again, historically, it doesn't compare to this reference point back here. But over the past decade, we have been selling more lots and putting them more under contract than we have in a long time. Dollar volume, now again, dollar volume is still, 40 million is minimal when you compare it to almost $1 billion of residential real estate, but it's up 152% from a year ago. So, for those of you who do work vacant land, I mean, I have some vacant lot listings. So, it's good to understand the difference because it's good to understand the overall Charleston numbers, but again, you still have to dive down to what's relevant for your specific buyer or seller. And you can see the differences in the market between residential and your vacant land. And one last thing I wanted to go through is that, okay, so we did residential vacant land. So let's look at, and I don't know if Karen is on this call, but Karen Abrams, now that we have multiple Karens. So I wanted to touch base and explain to you how important it is to still understand the market as a whole, but you got to dive down into an area. So remember, you can go pick a specific area. You can pick a subdivision if you want. You can pick, and again, if you go too far down in the weeds, it doesn't have all the data, but let's just pick an MLS area. So I'm going to pick on inside the crosstown. So here's area 51, and I just wanted to go through quickly some of these things. So, so here's median sales price, and let's ignore this sale here because that's a very large sale that is throwing off all the numbers. So if we go back, let me go back and do a rolling 12 months. We'll smooth it out. So this is, oops, sorry, I think I am still on, there we go. So residential MLS area 51. So what I wanted to show to everybody is that if we go back in time, look at the median price of downtown. So we obviously pre-recession, and then once we came into here, we've come out of it over time. But look at what's happened since, let's say, beginning of last year, right? We've slowly kind of started to tail off on median price. So our median price downtown is actually going down year over year. So it's a very interesting difference between what the entire numbers residential as a whole. So we've lost 10% median price year over year. Price per square foot, again, the same sort of trend is that you see this downward trend, down 14%. percent of original list price. It's jumped up the last couple months, so that's a positive for, becoming less negotiable, but still the market as a whole was 99%. We're at 93%. So it's lower than the market as a whole. So again, if you're dealing with properties downtown, it's a different conversation. Days on market. So days on market, we're at 70, right? Well, what's interesting about this is that we were at 29, 30 last summer, right? And now all of a sudden we're sitting at 70. So we're doubling our days on the market downtown. So it's taking longer to sell downtown. And what was our days on market for the Charleston MLS? It's 11 when you look at the entire MLS, and the downtown is at 70. So south of the crosstown. Months of supply, again, we're at 12, 13 months of inventory. So we were at 1.8 months of inventory for the MLS. We're at 13 months for Area 51. So Area 51 is behaving like a buyer's market, whereas the rest of the MLS is behaving like an extreme seller's market. Homes for sale. So here's homes for sale. So we're sitting right about 400. So slightly lower than a year ago, but an upward trend over the last few months, and more than what we had for sale pre-recession. So 400 homes for sale. Here's closed sales. And you can see closed sales, was kind of flat for a few years, but then it's, for the most part, been drifting down a little bit. Fairly flat year over year, but an overall drift down. New listings, again, look, coming out of COVID, the new listings have jumped up. They fell off coming into it and then jumped back up. But, we're putting a decent number of homes on the market. Pending sales, you can see that rise in pending sales, but not a significant one like the MLS as a whole. And then dollar volume is actually lower than a year ago. So September of 2020, there was a lower dollar volume in sales, slightly, fairly even, but slightly lower year over year in MLS for Area 51. So again, it's so important to take, your specific, whether you're dealing with a buyer or seller, and break down, even if it's by MLS area or by price point, break down and look at everything that we're looking at going through here. Vacant lots, condos versus single family homes, everything is going to look a little bit different. And it's important to understand how to convey those differences to your client to make sure that you're giving them the best advice and giving yourself the best advice of how long they need to be listed at a certain price. What is the typical days on market? How negotiable are these, deals for this area? So all of this comes into play for you as an agent, but Market Monitor, go through there. I mean, if you have an existing listing that you're struggling with, go through there and define some criteria up here. Look at what the market's doing. So you're not looking at comps here, but you're looking at conversation pieces to have with your client. If you have a very active area and the average days in the market is 10 and you've been on the market for 40 days and haven't changed your price, I got news for you. You need to lower your price. It's the market is telling you that. You're not being the bad guy. The market is telling you where you need to be priced. So again, I know that looking at comps is one thing, but understanding what the market is doing for your client is completely different. But it's so important to have those pieces of information, and you don't have to go through all of this with your client. Just pick out the days on market, maybe months of supply, explain to them a handful of things that can get you over that hurdle. And if you're in a competitive listing appointment and you're able to explain some of these things to them about the market, you're going to come across as knowledgeable of what the market is doing, not just the comps for their specific home. So I think all of that is important to be able to go through. So, and I'm not going to take any more of your time on this beautiful Friday afternoon. But if anybody has any questions, I haven't seen anything in the chat box, but I'm always around if you have any questions. And again, the plan is once a month, we go through the market as a whole and then maybe talk about more specifics. So if there's anything you want to see for the next meeting, feel free to reach out to me and I can cover some more information or details on it. So I don't know if Tiffany or Karen or anybody else in the leadership group has anything to add before we leave on Friday, but I hope everybody has a great weekend, and I'm around if you need anything. So
Thank you
Have a
so
great-
much, Anton. This was great information.
Definitely. Thank you.
anytime. So, all right. And we'll do it the first Friday of every month. So that's the plan to do this. So,
Good timing.
all
Have a
right.
good weekend, everyone.
Thank you,
Thank you.
Anton.
Bye.